This is Kenya News Update today. What if I told you the entire global financial system is being held hostage by one word? AI, artificial intelligence. It's not just about robots taking jobs anymore. It's about AI fears triggering a multi-trillion-dollar sell-off on Wall Street. And now, the shockwaves are hitting European markets. Coming up, you'll discover why a single technology is causing real estate giants to tumble, how a French aerospace company is defying the chaos, and what President Trump's next move could mean for your money. Meet the Pan-European Stock 600, the continent's financial heartbeat. At 8:50 a.m. London time, it was flatlining. Most sectors were in the red. This wasn't a random dip. This was a direct reaction to an AI panic attack that swept through New York. Stocks tied to real estate, trucking, and software were absolutely hammered. But here's the twist. In the middle of this market meltdown, one company is soaring. French aerospace titan Safran just reported a net income rise of 3.5% year-on-year to 3.17 billion euros. That's nearly $3.8 billion. Their revenue skyrocketed 15% to 31.3 billion euros. The result? A staggering 7.3% gain on Friday, leading the entire stock 600. One company's triumph in a sea of fear. And then something shocking happened. The AI jitters from Wall Street didn't just stay in America. They rippled across the Atlantic and slammed into Europe's property sector. Land Securities, the UK's largest commercial property developer, lost 2.5%. Its rival, British Land, also fell 2.5%. Segro, specializing in business space, dipped 1.2%. Even Germany's Vonovia was down. These aren't small players. These are pillars of the European economy, shaken by a digital ghost. But here's what nobody's talking about. While markets hold their breath for U.S. inflation data, another story is unfolding in the metal markets. Aluminum futures in London dropped 1.2%. In the U.S., they fell 0.6%. Steel futures were down. Why? Because the Financial Times reported that U.S. President Donald Trump has plans to scale back tariffs on steel and aluminum. One report, one potential policy shift from the Trump administration, and global commodity prices tremble. This is the new reality. A tweet, a rumor, an AI fear can move billions in seconds. Meanwhile, in a quiet corner of the market, another drama played out. NatWest Group, a major UK lender, recorded a fourth-quarter profit of £1.48 billion. They smashed analysts' estimates of £1.24 billion. A huge win. And yet their stock fell 0.3% in morning trade. In this market, even beating expectations isn't enough to escape the shadow of AI anxiety. The implications are massive. Some say this is just a healthy market correction, a recalibration after the AI hype. Others see a crack in the foundation, a sign that the technology driving our future is also creating unprecedented volatility. The tension is palpable in Munich, Germany, where international officials are gathering right now for the security conference. They're talking geopolitics, but the real insecurity might be on the trading floors. But if AI is the problem, what's the solution? Do we slow down innovation? Or do we let the markets ride this unpredictable wave? The nurses in that Kenyan courtroom fought for 9 years for clarity. Today, global investors are fighting for clarity in a single trading session. The stakes? Your pension, your investments, the stability of economies from Nairobi to New York. Do you think AI is a legitimate threat to global financial stability, or is this just another market overreaction? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking news that connects the dots from your wallet to the world.